Earnings season is kicking into high gear with several software stocks gearing up to report earnings in the coming weeks. The latest quarterly results are expected to shed light on momentum for the software space as tariff impacts and demand uncertainties hanging overhead. For more insight on future momentum, let's get to Macquarie Head of U.S. Technology Research, Steve Koenig. Steve, it is great to see you. Maybe to start higher level, Steve. I think when a lot of investors think about the software sector, they think, okay, this is a more relatively tariff-resistant sector, Steve, but there are still risks. Walk us through what those are.
Hi, Josh. Thanks for having me on. The software companies in the U.S., most of the mid-cap and large-cap companies have significant exposure to large enterprises that can make some pretty big purchase decisions. And when you have policy uncertainty like we've had, those decisions can get deferred. They can get pushed out. Companies are reluctant to make big commitments. As far as smaller customers are concerned, they tend to be, their buying habits, it's smaller number of software seats, et cetera. They tend to be more linear with the economy. So if the economy degrades and we start to see, a recession or a slowdown, the purchasing by the smaller companies also gets affected. So those are basically the macro risks. And you're probably going to want to ask me more about it, but I don't think we're going to see those risks come home to roost in a big way in Q1. I think there's a lot of momentum there. And I think most of the major software names in the US have left pretty ample room in their guidance to either raise their guide or not cut their guide. So that's kind of the big picture outlook we have here. And valuations have certainly come in quite a bit and are looking pretty attractive on a lot of names.
So that's interesting, Steve. So even with that sort of caution, that unknown in terms of the outlook, you think there's a good amount of negativity that's already priced into most of these?
I think that is true, Julie. But I also think there's a certain buying dynamic that, even a lot of investors may not fully appreciate, even institutional investors, which is software companies have a lot of mechanisms to maintain their momentum in the short term, even in the face of deteriorating conditions. That's always been true, even in the 20 years that I've been on the sell side covering software. A lot of these sales cycles are very long, and the sales get, pretty close to being concluded, and the projects are greenlit, and the decision may have been made in calendar Q4, but the software gets turned on, the cloud software gets turned on in Q1, and bookings registers in Q1, and that revenue starts flowing. And sometimes it can start flowing, well after the decisions are made. So that means there's kind of a lag time, if you will, in a lot of this, how this decision making affects revenue. And I think what we already saw from ServiceNow and SAP were some pretty good Q1 reports that set the tone for the space. And I think a lot of other software companies are going to be hesitant to start, sounding economic alarms, and a lot of them have room to, if not to raise their guidance, to not cut their guidance. So I think Q1 will be fine. The question mark is going to be more Q2, Q3.
Having said that, so some questions ahead, Steve. I know there are names in your coverage universe you like. I want to get to some of those. Why in you're telling your clients where the opportunities are. Autodesk, you say, that's an opportunity. How come?
Yeah, well, a couple things going on there. Number one, they just settled with the activist investor who was fighting with them, Starboard Value. Starboard is going to has suggested, and Autodesk has accepted 2 independent directors on its board. Autodesk has already been focused more so than we've seen in past years on improving their margins, and we think there's significant room to make the business more efficient, to continue to improve margins. And I think the Autodesk management will continue to pursue margin growth as they have been, but but even perhaps more aggressively. And I think one thing that enables them to do so is the fact that this year they are transitioning to a new transaction model where they're transacting directly with customers. Resellers are still there to provide service, but Autodesk is going to gain much more visibility into the end buyers. These are construction firms, architects, design firms that now Autodesk will have that visibility that enables them to know the customer better, to cross-sell, and to sell more efficiently. So I think that's important for Autodesk. I think the other thing that's going on is they're being successful pushing into providing software for downstream construction activities, which is largely a greenfield market. And Autodesk is one of the pioneers in this marketplace. And that's all upside, we think, going forward in terms of their adding to their revenue base.
Steve, I want to get your thoughts on another name that you like, which is HubSpot. Those shares are down about 12% or so thus far this year, and they're coming out with their earnings on May 8th. So do you think that's going to be a catalyst potentially for the name?
Yes, I think potentially it can be, Julie. We like HubSpot. We're outperform rated on HubSpot as well as Autodesk. And with HubSpot, there's a couple of reasons we like this stock. One is it all comes down to fundamentals, but one is that they're growing, probably this year in the high teens, and we think that's a very sustainable growth rate as they broaden their footprint in the various pillars of customer relationship management, from marketing to service to sales. And so that kind of growth opportunity presents the ability to sustain this high teens revenue growth. I also think there's lots of room for margin expansion as this company grows and matures and benefits from operating leverage. Lastly, we think this year, their fiscal 25, which ends in December, that there's ample opportunity for revenue outperformance relative to the guidance that's been put out there. When we look at the numbers, that we think even in an environment, as long as we don't go into some kind of very bad recession, I think there's plenty of room for revenue upside this year.
Steve, appreciate your time and those picks. Thank you.
Thank you, Josh. Thank you, Julia. Great to be here.